Hi, so I'm Mike Wilkinson from Frog, and as Sarah just said, I'm going to be talking a little bit about should we still be focusing in Europe whilst we're going through all the Brexit negotiations. Um, it's not a party political broadcast, there'll be none of that. All I'll do is share a few experiences of some of the different markets which we've worked in and how we found Europe compared to some of those markets. And of course, at the end, happy to answer any questions at all. I should start by just telling you what we do a little bit. So a lot is said up there, but essentially we're a UK education company. We've been around for nearly 20 years here in the UK, and we typically work with schools directly or with governments or systemic groups to be able to look at system-wide transformation of learning through technology. Back in the early days, that meant giving teachers tools to empower them to engage students in the classroom. But over the fullness of time, that's expanded really to look at data-driven education and also to be able to use that data to impact what does actually happen in the classroom. So I'll give you a little flavour of those projects because that'll give some international context, and then I'll delve into the European aspects. So some glimpses of things that we do. So schools, just on the left-hand side. So we do work with lots and lots of schools all over the world. I think that we've got about 12,000 individual schools that we work with around the globe. Our primary market was and always will be the UK, although this year is the first year actually our international schools have exceeded our domestic revenue. So some of that is groups like the Catholic group in Northern Territories of Australia, certain states of America, a reseller in the UAE, through to just individual schools here and there across 24 different countries. Some of the other sorts of clients we work with are in the corporate learning management market for same sort of technology really, but the fundamentals of learning, whether it's in school or in business, are pretty consistent. So we found a good space in that. The middle one's interesting because that's both here and overseas again, so outreach. We've got an example there, the Royal National Theatre, that we've worked with them to be able to put real high quality video resources with the likes of Benedict Cumberbatch, Johnny Lee Miller, Lenny Henry have all waived their rights to make all that stuff freely available to every school in the UK. And they're now looking to internationalise that and say, how do we, as Brand Britain, export what they do? And that started attracting quite a lot of international attention. So quite recently, we've done the same project for the Australian Theatre for Young People. And they've done that purely off of the back of seeing what the Royal National Theatre have done here in the UK. So again, we're trying to look, everything we do really now is how can we drive export? What's most pertinent to this dialogue really is these two things. So education platforms is what we do. I mentioned it's at a system-wide level. So our biggest example is we have a deployment for 10,000 schools across all of Malaysia, a government contract. And the idea of that, they put 4G across the whole country. They wanted a platform for learning to ensure parity for every single student across Malaysia and get good schools, helping the schools that need a little bit more help across the whole country. I'll talk about that a bit more in a touch because I think drawing the differences between that and, say, the European market is quite interesting. And finally, one thing that I think has been useful for us in exporting into all these markets is our development platform. So under the hood, rather than just be, here's our product, here's our product, here's our product, we've got a development platform that lets us configure and change things because every market's different, right? Just like every school, we're all in EdTech. Every school's different, so it's that flexibility that's enabled us, I think, to move into these markets. And the one I'll talk about the most is this, because this Combit project, Aula, is our project in Denmark, which is a national collaboration portal for every single stakeholder in all of Denmark's education system. And that's really our project in Europe that we'll talk about the most today. So those major exports, as I mentioned, a transformational project in Malaysia. A bit more on there you can sort of read, but what's important in each of these markets we've found is working with a partner. So first and foremost, two of the partners that we want to work with in any market, the same's true absolutely in Europe and in Denmark. How do we identify the people we can work with who are in the right space to deliver transformational projects like this? So in this case, YTL, using their telecoms arm to put that 4G network across the entire country so that we were able to then put a learning platform in and give teachers the tools to enable this sort of transformation. And this was linked to economic reform, to see Malaysia as a developed country by 2020. It is the coolest project on the planet. I mentioned also, so another one I'll draw comparisons with is Australia. We're doing quite a lot of trade in Australia right now. It's a good export market for us. We've got a number of systemic groups over there as well as individual schools, but again, working through a partner out there who has that local knowledge, expertise to help to make sure we can be successful. But what's, I guess, a big difference and pertinent again to this is there's an 11-hour time difference, and that has quite a profound impact on the way you do business. And then finally, just to give you that sort of final background of us as an export company, Denmark. So this is really, it's about connecting the entire country. So they have this driver, again, to ensure parity, that every single child has the equal access to education. Every single child's parents have an equal opportunity to engage with the school system, to engage with their different municipalities, in order to make sure there's the, if you will, backdrop so effective education can then happen. And it's a national project, but it's not trying to take creative control from the individual schools. It's just ensuring there is a baseline for every single school. It's absolutely awesome, and this is quite a new project for us. And this entire project has come about in the wake of whilst all the Brexit negotiations are coming about. And I think one thing I would make as an observation before we start, Denmark, everyone thinks Scandinavia, but Europe, when we're talking about Europe, it's an economic region, not just a geography. And there's a lot of countries out there in and around Europe that we have a lot in common with, irrespective of where we will land after the Brexit negotiations. Denmark is a great example of that. So that's a cool project, and that's what I'll talk about our experience on the most in regards to Europe. So to the key questions really, is it still a market that's worth focusing on? So I'll try and address all of these by way of our experience. So as a backdrop, I suppose we're talking about EdTech, we're at an EdTech conference, but what's the wider business sentiment? So this is some research recently done by the British Chamber of Commerce. Happened to be president of Doncaster Chamber of Commerce, and therefore I've asked them for a bit of info on this, because what is the wider sentiment? And first and foremost, when I ask them their opinion on this, it's like, yeah, well, Europe, should we focus on it? Well, it's currently the UK's largest trading partner. And that's not going to change just because of Brexit. The parameters may change. As I say, this isn't any particular political view, but the parameters are going to change, and business is resilient. Business just has to deal with this, and we've all got to deal with it. But surprisingly, well, say surprisingly, it surprised me quite the appetite that business has. So this is a survey of over 1,500 businesses. When they did this survey, turns out 76% of those businesses are already trading somehow with Europe, whether that's through import, export, they already have a relationship. So this is from an informed user base. And looking at that, 36% of those people, those businesses, intend to increase their plans for export into Europe specifically over the next 5 years. And I think it's quite interesting to look at the distribution in and around Europe as well. But there's real strong sentiment for wanting to trade in Europe. Now, we can't ignore, I suppose, some of the challenges around the costs and the free movement of people, etc. But this is about, is it worth focusing on from a sales, business development perspective? And ultimately, why most of these businesses are wanting to increase their investment into Europe is demand. So if there's demand, then surely, providing that's cost effective, that's something we want to address or want to take advantage of. So of those surveyed, 48 want to do so purely on the basis that they believe there is increased demand in Europe for what we do here in the UK. There's other items in there, and I'll touch on exchange rate a little more as we go through this. But exchange rate, over the next 5 years, pound's weak right now, but that does give some level of competitive advantage. I mean, that may be offset by taxation in the fullness of time, but in the short term, those businesses surveyed by the BCC are seeing that as something which is driving their investment right now. So essentially, there's strong business sentiment for wanting to continue to trade in Europe despite Brexit negotiations. And I think my biggest takeaway from this is it's businesses that do trade, not governments. So in the background, these political landscapes may shift and may trade, but business will find a way to trade, providing there is good quality demand services and demand for those services. This one's quite a crude thing, really, but I think it's kind of important. It's kind of next door. So drawing on some of the things we've talked about in terms of those other export markets that we work on, the simplest measure is one of cost. Getting to Malaysia, getting to Australia is really expensive versus going into Europe, but that's only a kind of really small argument. That sort of has a sort of minor impact. What's more important to me on that is time frame. So in Europe, we've got like a couple of hours here and there in terms of time frame, which makes it really, really, really easy to do business, to build relationships, to build trust, to talk to people, to see people. When we're doing the same in Australia, for example, we can be an 11-hour time difference. And that, I have to say, is so, so challenging, because for us to have a conversation, yeah, we can decide if we want the demand, we'll get up and we'll talk at 6 in the morning. But that's an unsociable hour for the people we want to do business with out there. So it's time zone, actually, that I feel makes such a big difference. So to the point about, is it worth focusing on the European market? Well, one of the real items is that time zone makes a significant difference. And actually, I didn't kind of realize this, but some of the stats up there. So PwC did some research looking at 100 previous studies of doing business, and they actually found that halving the distance doubles the volume of export. And I thought, in a world, we're all in technology, I thought in that world, this really, really surprised me. I thought that would break down the barriers. But actually, this is still very, very true, that actually proximity is one of the biggest factors to what makes for effective trade. So, no, not least, you'll see at the bottom in here, it is about building trust. It is about doing business face to face. It is about being able to talk and dialogue fluidly, affluently. So that is part and parcel why I think it's right. And at the bottom there, the FT thing just really confirming there's demand. So if you're looking at any market, one of the key things is the demand for what we do. And I guess from there, it's kind of, if you've got demand, what's our edge? How do we make sure we win in that market? So we're here to do EdTech. We're kind of good at this stuff. The UK is awesome at EdTech, and it's known internationally as being awesome at EdTech. We won Malaysia because the Malaysian government and the people working on that project came to the UK to find the best of educational technology. We won Denmark because exactly the same happened. The Danish came to Bett specifically, looking around what was happening in the UK to find the very best EdTech. There are 12, we just had dinner with some of the Danish people who are here. There are 1,200 Danish people in London today because Bett and because there's the EdTech Forum, that is in the UK. We are seen as the hub around the globe, but not just around the globe. I mean, if you look at VC investments, the UK in Europe is the biggest conurbation of VC investments because we're really good at it. 34% of all VC investment into EdTech in Europe is in the UK. That is just staggering. And when the markets, we've all got our own sort of view on things, but when the markets are looking at that sort of investment into EdTech and choosing the UK, if you will, as that hub, I think that really shows even that within Europe they believe there's a strong sentiment and a strong edge for the products, goods and services that the UK delivers. It's also just worth bearing in mind the size of that market and our export market at 19 billion is what it's worth to the UK economy. So is it important? For me, yes. So is the demand there? Have we got edge? Well, the demand and the clear business sentiment across the UK's largest trading partner is because of demand. Have we got edge? We've most certainly got edge. Our digital economy growing the fastest in Europe. And just look around, this is kind of testament to the fact we as a country exporting have edge. Of course, there's then that conversation about our own markets, our own products and services, but the world and Europe is still looking here for those products and services. So I guess, is it worth focusing on it? Is, key question. So to the point I was making there, there's no kind of simple answer. Essentially, I guess it depends on your products and services and the target audience that you're looking for. But if you can see there's demand for your products and services, you can see there's a target audience you want to work with, you believe it's cost effective to go for that market, and it's viable to do so because of the time frames and short distance between the two, then absolutely. Touching again on Denmark, they came to Bett to find us. And strangely, you know, we talked to lots of people around, and I keep asking today, when I was doing this, anyone who's a European visitor, why are you here at Bett? And every one of them is saying, because this is where we come. It was almost like a daft question. It's where we come to find technology. So Europe's still looking in, and providing we've got the right goods and services, we've got every single opportunity. And the other question I then asked around that is why? And why aren't you growing that domestically? And the kind of key thing is, everybody, their schooling system, just like ours, is demanding the best the world has to offer when it comes to their products and services and the companies they work with. That's why the VC investment is happening here. They're not going to just stop demanding the very, very best. And the UK is very well poised to be able to satisfy that demand. Now, may that change over the fullness of time? They could create tax breaks locally to encourage more edtech startups in those countries. But let's face it, we are still in a leading position, so we're always going to be ahead. And providing we take the bull by the horns and continue to deliver that level of quality, then why wouldn't we still be accelerating? Why wouldn't we still be deemed the best in the world for it as we are? So for us, we believe, yeah, Europe is a market. And I use a Danish example to just put some meat on the bones around there. So how did it work? How did we grow this business during a Brexit negotiation and all that uncertainty? Up there, but essentially, Bett told us there was a market. There were so many people coming over here, different schools, different companies, and different parts of the Danish education department, if you will, all looking round at Bett for educational products. So we found out there was a market out there. We really saw an immediate need. We were invited over there by a number of different partners saying, hey guys, we'd like to see your EdTech over in Danish schools. So we went and thought, right, we'll invest in that market. So as we put up there, we're invited out there. Combit is the government organisation which is looking after the procurement, if you will, of specifically ICT for the government. We were invited out there to say, look, you guys could do really, really well. So we did a bit of, as you would, DD on the market, a bit of desk research more than anything else. We saw the demand. We also saw how they purchase. Weirdly, this seems to be the case across Europe. It used to be the case in the UK, but it's not anymore. They still purchase at a systemic level. Municipalities, in their case, whereas we're like individual schools or small groups of academy chains here domestically, the cost of sale is therefore significantly more effective when trading in Europe than it is in the UK. The cost of acquisition, it's almost a compelling case for doing it, putting effort there. Don't get me wrong, we wouldn't turn our back on the UK, but the cost of doing business, the cost of acquiring business is actually more effective in Europe for us than it is domestically right now. But we started trading, we found a partner, we entered the market. And then in doing that, the partnership thing's been really, really important to us. We have found, other than a few, I suppose, quite entertaining jibes, we found no downside. They do see, they have a view on us leaving the European Union, but they doesn't stop them wanting to do business with us. In fact, it's been a strange icebreaker in many times. We've just been able to kind of laugh about it and move on because businesses need to trade. People want great services, they want great products, and we want to export those great products. So we got out there, we found some good partners, we built a reputation in the market. This is typical export stuff, all of which, though, we were able to do on a reasonably low cost base because of the continuity of dialogue which we could keep, the trust we could build. And doing a good job out there and being able to do that without too big an expense as a export market, when it came to a national contract, we were already in the mix for because we've been trading successfully out there. And because we'd built such good relationships, because cost and time zones let us, we were able to find a partner who could deliver the scale we needed to work together with really, really easily. So we participated in that tender. And you can imagine doing a tender between the UK and Denmark. Actually, it's not that bad. It's actually quite easy. You've got loads and loads of documents to fill. When we were doing this in Malaysia, that was really, really hard because it's not you do a bit, we do a bit, and you've got separate sections. You're working fluidly with a partner. The time zone meant everyone working through the night when we did this in Malaysia. That's really hard when you're looking at that sort of tender document. This was really fluid, and we built up a great relationship with the partner through that active collaboration. And thankfully, we were successful in winning that contract, which we've now collectively got to service for the next 10 years. So I suppose, did uncertainty affect is probably the question as we're going through all of that. What part of that would you change just because there's a level of uncertainty about the political landscape, that there might be future taxation, that there might be some future red tape we have to jump through? Would we have stopped or done any of that any different? And in short, the answer is no. The demand was there. We had a great product that they wanted because we'd gone out and found that, and we found that because they came to England to find the very best of what we've done. We're not going to wait within that uncertainty and go, well, we'll have to find out, or that might hurt us in the future. You go and win the business and then deal with the fallout if you have to. And back to my point at the beginning, business is resilient. We will find a way. Whatever is thrown at us, we'll have to find a way. And if you've got really good, strong partners, they'll help you find that way, because business is also about mutuality. And if you've got that mutuality there, you will navigate that landscape between you, because it's a shared responsibility for us all if we want to trade together. Part of that, though, is going to be about exchange rate, and we talked about that just a touch earlier. So a few observations from us on it. Exchange rate, we knew might affect us, so we negotiated the contract in sterling. As it happens, this is exactly the same as what we've done in Malaysia and Australia. When we've done any scale contracts, fix your price in sterling, you are no longer sensitive to any currency fluctuation. I'm not clever enough to play the exchange market. I know what my costs are, I know what the income is, and I've got predictability and surety of that income by trading and negotiating a contract in sterling. And if you can do that, that's worked out wonderfully for us, because that surety of revenue has made it the case. You don't always get that opportunity, of course, but if we can, that's a strong position for us certainly to be in, and that's worked for us. We've not been able to do that in sort of the schools market necessarily, or when we've been going after individual schools, but then again, that's just about adjustment of price. Now, right now, that's great, because even trading at UK prices in local currency, we're now more cost effective because the strength of the pound is quite low. So it's giving us some real short term, and I do say short term because it won't last forever, but it's giving us some short term competitive advantage by trading in that local currency for those schools. We are cheaper than some of our competitors from the US, for example. We're cheaper than some of the local competitors, whilst actually maintaining a price that if we had parity, we might not have been. So we are getting some short-term benefit, and we're trying to capitalise on that now, because of course that creates some momentum for us. Yeah, we're exposed to currency fluctuation, so that may change over time. Of course, we can adjust our pricing, but if we're demonstrating quality, as we all should and have a responsibility to as companies, if we have to increase our cost base to be less competitive, we're doing so from a premise of we can deliver a better result, or certainly the result we know our schools have seen. The reason I say it's temporary, even if the pound remains quite weak, any change in taxation that we're likely to get right at the beginning, you may have seen tariffs is one of the things business, I think it was 46%, are most concerned about. Well, that's going to offset the competitive advantage that we have. But hey, we're going to wait and not do business just because of that. If there's that demand, we've got the edge. There's so for all those reasons. So one thing you can do, though, and one thing we've been looking at together with our partners, is where we do have cost in going after a market and where we are being paid in local currency and therefore susceptible to those currency fluctuations, can we secure our cost in that same currency? So actually, you're sort of getting a parity in terms of your overall income. So whether that's things like hosting in a tech world or even people resourcing, if we can recruit locally, our cost base is in line with where our income comes from. So if we can't secure in sterling, because that has worked for us, that's one way we're able to offset currency fluctuation. So how's business being affected? And again, this is still sort of looking through that lens of, is it worth a focus? So For all the reasons I've mentioned before, some notes up there. We have a really, really, really fluid relationship with our partner. It makes things really easy. We talk every single day. We have daily stand-ups with teams. When we're doing this in APAC or we're doing this in the ASEAN region, it's 1 or 2 people. We get the entire teams who are working and collaborating together every day. They've built incredible trust. They've built incredible relationships because of the timeframes. Issue management. You're always going to get problems on scale contracts. Not necessarily, that can't be overcome, but it's so much easier to do that face to face. You can jump over. You can be there and back in a day. It's so easy to deal with things. Technology is great. We advocate it. It's what we do for a living, but there's nothing quite like face to face. That's back to the FT and the PwC research about the importance of that, which I think we all know, but in Europe it's so much easier. But what that's done, it's enabled us to build what I would see as a much deeper relationship with our partner than we might have done when we've got the case over in APAC, for example. And that's meant we've started to think about doing more business together. So rather than just being a one-time transactional relationship in order to be able to service a contract, we're now looking at how do we do more of this. And of course, what's the market we're going to collectively look at? It's Europe. So now, because of the proximity, because of the relationship we've been able to build, we're now looking at more European markets together. Some reasons we think Europe's probably our best market together, not least we're still 2 European countries despite the political landscape. The trends and shifts that are happening are similar. So if you've won business in one part of Europe, it's fair to say, okay, there's a division of both sides of Europe, but it's fair to say there's more business out there, more demand out there for those sorts of products and services. Infrastructure is similar. The way people do business is similar, and referenceability is. So one thing we found, we thought after we won Malaysia that we'd be able to trade on that for export very, very easily. But people look at that landscape and think that's very, very different to the world in which we operate in, particularly in Europe. Having referenceability in Europe, people see that that's like us. So when we're trying to trade, that's why we're seeing Europe as a market that we're collectively going after together. Culturally similar as well in terms of things like work ethic and that proximity again. So these are all the reasons we're aiming for more business in Europe together by having started trading in Europe together. So I guess right back at the beginning, we had the survey. We're kind of in that percentage of who are going to be investing more into European export over the next 5 years. We really believe, irrespective of that political sort of landscape, we're just going to trade through it, and just whatever it throws at us, we'll have to deal with the fallout. But with the right partners, the right opportunity and the right products, we will equally be resilient. We've got to be. And I think we'll do quite well. And I think any UK business exporting, we have an amazing export sector for EdTech. We have the demand there with people actively here in the UK looking for the products we have, or we can go and find that and find the right partners, and it's next door. I think it's almost no-brainer for us, and business is resilient. We'll make it work. There are things that we won't know, and I kind of, people ask me about Brexit and what we think about taxation, legislation. I ain't got a clue. We can all have an opinion on what will happen, but I ain't got a clue, and I'd like some surety. I think the biggest thing we all want is some certainty, some surety, because then we can get on with planning and do stuff. But in the meantime, we're certainly not going to turn off that market because we don't know. I think a lot of the landscape around legislation affects trading with Europe, but I think that's very different to focusing on it for business. The free movement of people may cause us some real challenges around skills gap. The cost of labour may cause us some real challenges, and as EdTech, particularly access to developers, quality developers, is going to be really, really difficult. But that's the wider conversation about trading with Europe. It doesn't stop anyone doing new business with Europe and focusing on business and the opportunity really to find and create demand out there. So we are all going to go through that landscape, and hey, who knows what's going to happen, and I'd love to see what does happen. I would hope the government do give us some certainty as quickly as they can. That's kind of my ask, I guess, in any of it. But hey, it's still a market for us. Likely going to be taxation, tariffs. Might put us on par with the rest of the world, but hey, look at the WTO rules. that's about the worst that can happen. And if actually the sensitivity around your pricing, you look at the parameters within WTO rules, you're probably there or thereabouts. It's not going to be a seismic shift, because it can't be a seismic shift. So I don't think that's going to be a huge challenge for us. But again, who knows? All of us will just have to deal with it, as I mentioned there. But I aim to finish really broadly on time, in time for questions. It's just like anything in business, right? We've got these beautiful constraints. I read this book recently, up there, Adam Morgan and Mark Barden. I think it's always good to end a talk on a book, so someone's got something to read. But so this beautiful constraint is really cool, because actually it's sort of this whole acceptance that stuff's going to change and you can't stop that, you can't influence that. But what you can do is stop thinking in the same way we've always thought. Whatever happens, stuff is going to change. So our business models need to change. We need to change the way we think about export. The UK domestic market, being as it is, there's challenge in our sector domestically. That's forcing us to change how we think and reshape our business models. Brexit's going to do the same. This book's a really good way of looking at those constraints and sort of saying, stop trying to make these small incremental changes, but fundamentally remodel the way you think and do things. On the inevitability, you can't change the constraint, and turning that constraint and problem, as we're all seeing it, we do think there's legislative and taxation problems. Turn that into an opportunity, because they will be those opportunities, because business is resilient and we will find a way. So great book. You'll find about painting chicks blue. It's all kind of weird stuff, but actually you look at the evidence base, and when people have done this, it's fundamental to being able to survive and evolve as a business. So is it worth focusing on Europe? We believe so, despite the political landscape. We found it arguably easier to deal with and trade in versus other countries a bit further afield, with different political landscapes, different situations. We strongly believe Europe's a market we should still be focusing on, providing there's demand. And while ever there's demand and we have got the best products and services in the world, there will be a place for us trading with Europe. So that's it from me. Happy to answer any questions at all. Thank you for your time.